Reddit is one of the fastest growing social media companies in the United States when measured by the number of users, the percentage of user growth, and the percentage of revenue growth. But is this stock a buy for 2025 and beyond? I'm going to answer that question in this video, evaluating the company's revenue, profit, and cash flow growth, looking at its return on invested capital, and then finally weighing it against two valuation metrics, the forward price to earnings ratio and the discounted cash flow valuation model's suggestion of the intrinsic value per share. I'll do all that in this brief video, so let's get into it quickly.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So looking at the previous few years at Reddit, you can see phenomenal revenue growth, almost 3x where it was in 2022 on a trailing 12-month basis to $1.122 billion. The company has done this by increasing the number of users, especially from the North American region, where the average revenue per user is the highest in the world. Also, Reddit's benefiting from the rising spending on artificial intelligence, as companies are partnering with Reddit, giving the company money to get access to all of its users' posts to include in training large language models. I suspect that revenue source will continue as well as the number of engagements on Reddit increase. That will allow it to sell more data to generate more revenue from that revenue source. The prospects look strong for Reddit in the future. Now, while its revenue growth has been excellent, the company has struggled with its operating profitability. It's negative 54.4%, and they haven't demonstrated very much progress in improving this metric. The company does use significant sums of stock-based compensation, which brings down its operating profitability. But if you look at its cash flow from operations numbers, they are better than operating margins. So let's get into those. And here's the cash flow from operations number at 10.21% and demonstrating clear upward progress at a very healthy rate. Now, the big difference between operating margin and cash flow from operations are non-cash expenses, things like stock-based compensation, which Reddit uses significantly. Other non-cash expenses include restructuring charges, depreciation and amortization, and others that included in the operating income on the income statement. But since they are a non-cash expense, it's not cash leaving the company. You might say, well, why are they allowed to do that? Well, talk to the people who set up the accounting rules in the United States. The accounting rules are unreasonably complex and they create all of this confusion, and it's great news for accountants. However, it's tougher for investors and analysts like myself to digest all of these differences, all of these changes and moving parts because of these non-cash expenses. One of the reasons why companies like these non-cash expenses is because they can take on a non-cash expense and lower their tax bill. For instance, let's say they have an intangible asset that they have valued on their balance sheet at $10 billion. If their business worsens in the slightest, they can look at that $10 billion asset and say, well, we don't think it's worth $10 billion anymore because the rate of our business growth or this or that factor has worsened. And so we're going to write down that asset. We previously told you that it was worth $10 billion. We are now going to update that and tell you that it's worth $8 billion. So we're decreasing the value by $2 billion of our intangible asset. And so that will bring down their income for that period where they report that adjustment. And that $2 billion decrease will lower their tax bill by the percentage of their effective tax rate after lowering that valuation. So that's a non-cash expense. It decreases the intangible asset value by $2 billion. Cash doesn't leave the company. In fact, the company's cash flow might actually increase because they pay a lower tax in that period because of that decrease in income, because of that write-down. So that's just one way companies incorporate these non-cash expenses to bring down their profitability, bring down their tax payments, while at the same time keeping cash flow either unaffected or actually improved if it lowers the tax bill. So the company's return on invested capital, this measures profitability. So since the operating margin is negative, the return on invested capital will also be negative. But in this metric, they have demonstrated improvement to negative 55% from negative 200% in early 2024. All right, so now let's look at valuation, and I'll start with the forward price to earnings. The company's forward PE ratio is at 48.26. I also wanted to incorporate the company's free cash flow, price to free cash flow, and its price to free cash flow is 234. However, given that the company's free cash flow is increasing at a healthy rate, I suspect the company's price to free cash flow will improve. I do not have the numbers to calculate the forward price to free cash flow, but I do have the numbers to calculate the forward price to earnings, which at 48 suggests that the company is twice as expensive as the average stock in the S&P 500. But at the same time, you're getting a company that's growing its revenue and its cash flow at a much faster rate than the average stocks in the S&P 500. I also wanted to look at the valuation using my discounted cash flow model. And utilizing this, we see that the Wall Street analyst estimates for the company's free cash flow growth over the next 5 years are at a compounded annual growth rate of 47%. So its expected growth rate in free cash flow is extremely robust, and you can understand why the stock trades at a premium valuation. My discounted cash flow intrinsic value for Reddit has it trading at $156, but its current market price is $167. However, I used a beta of 1.25 for Reddit. If I lowered the beta to 1, it gives me an intrinsic value per share of $204. So I would suggest my intrinsic value is somewhere in the range of $156 to $204. Still, I would suggest my calculation of Reddit's DCF suggests that it's fairly valued. I would say fairly valued for the DCF and fairly valued for the forward price to earnings is my conclusion for Reddit. But does that make the stock a buy? I say yes. I have rated Reddit stock as a buy because I'm always willing to pay a fair price for what I perceive to be an excellent business or a really good business, which I do perceive Reddit as. The growth in the number of users in North America means it's gaining market share. People are spending more time on that platform versus other platforms. And on top of that, the company's demonstrated improvement in cash flow from operations. So for those reasons, I would be willing to pay this premium price, and I have Reddit stock rated as a buy.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.